I made $1,700 trading 0 DTE options in slightly less than an hour. Today, I'm going to show you guys the most important trait that we need to develop in order to become a consistently profitable trader. So first, let's talk about the trade. So on February 11th, I traded 2 credit spreads. The first one I traded was on SPX. It was a 60-55, 60-50 put credit spread, and I sold 10 of them. For each of these credit spreads, I collected $200 of credit. So times 10, which means that my total maximum profit will be $2,000. So our max loss in this case will be 60-55 minus 60-50 times 10 and then times another 10. So it'll come out to be around $3,000, or another easy way is 5,000 minus 2,000, which will be 3,000. This is our max loss. Okay, and so for those of you who don't know how credit spreads work, I will link a video that I made explaining what credit spreads are in the upper right hand corner. Make sure you guys check that out and then come back to this video. SPX, which is the S&P 500, ends up above 60-55, will make this max profit of $2,000. If it's below 60-50, we'll take this max loss of $3,000. Calculate our potential return on investment, and it will be 2,000 divided by 3,000, 67%. You'll see later on in this video, we'll never risk this $3,000. That's a little bit too much. We'll risk around $500 to $600 or so. And so our actual risk to reward is actually 500 to 2,000, which is a 1 to 4 risk to reward ratio, right? And this is actually the ratio that we're going to be trying to get every single time we trade. So I'm basically risking $1 to make $4. And I'll show you guys in this video how to do that. So for this trade, I bought it back for $150, $115 debit, which means that I made $50 per spread, times this by 10. So I made around $500 on this one trade. We'll move on to trade number 2, which will be later on in the day. It will be 60-60, 60-55, same on SPX, which is the S&P 500 index, still a put credit spread. And for this one, I sold 10 again, and I collected $235 per spread times 10, which means that I had a max profit potential of $23.50, right? Again, this is our potential max profit. Okay, so really easy. Our max loss will be 5,000 minus this, so our max loss is going to be $26.50. And this again occurs when it's below 60-55, and our max profit occurs when we're above 60-60. I exited at $115, so I paid a debit of $115 to exit this trade. So I made $235 minus $115, which equals to $120 per spread, times this by 10, which equals to $1,200. So we're going to drop it down to the hour to kind of get the short-term trend, because we are day trading. The short-term trend actually matters a lot. The short-term trend, it's kind of an uptrend, but over the last week or so, it's been consolidating. 200 period moving average, which is this orange line right here, it's going up. Same thing with the green line, which is the 50 period moving average, is going up. But you can see that it peaked here, right? It got higher and then kind of went down a little bit, but now it's going back up. Another way to find the trend is to look at market structure. The market was at a low here. It formed a higher high, it reached 61.28. And after it hit 61.28, it swung low, formed a higher low, but then it's having trouble finding that higher high. So now that we know the trend, let's map out some areas that we want to trade in. I like to drop it down to the 30, start mapping out our areas of supports and resistances. 60-20. That is an area where the market bounced off of. So if the market ever retraces back to 60-20, then we could take potentially a bullish trade. But there are also some microstructures here. You can see that at this level right here on Monday, 210, there is a support here at 60.45, where the market bounced up, retested, bounced up, and retested. So there's an area of support at 60.45. If it enters into the 60.45 area, I am interested in taking a bullish trade if the C criteria of entry is fulfilled. Or if it enters this area of 60.20, then potentially I'm going to look for a bullish trade. Now let's move on to the day of. So we're going to drop it down to the 5. The market opened low at 60.48. It pushed all the way down to 60.42, and the market bought it all the way up to 60.53. In this area of support, there's actually a lot of buying power. So the market went all the way up, and then it hit this area of resistance that was previously found the day before, right? Because the market started taking profits. here it re-entered into the 60-50 area of support, right? And we talked about this. This is an area of support that I'm interested in trading. So what would allow us to trade in the bullish direction? We need to see some strength. Kind of like if you look back here, there's this candlestick here, there's this candlestick here. That is showing a lot of strength because of how long the wicks are. The market tried pushing it down. And then on the next candlestick, the market tried pushing it down again, and it failed to, and it went all the way up. So at 12:17 Eastern time, which is around here, once it broke past this high, this wick, I decided to enter the trade. Why? Because it has fulfilled my criteria of entry. The market came down and is showing signs of reversal, right? This is a doji, and it showed a lot of buying power off this area of support. So let's review. MAC M, the trend is up. A, it entered our area of support. And C, which is criteria of entry, is we're looking for some bullish confirmation. And this candlestick right here fulfilled it, and so we entered this trade. And then now, this is where we talk about S. Every trade we enter won't be a winning trade. Maybe, potentially, the market went up, right? Instead of continuing to go up, maybe it reversed and went all the way down. A good way to do this is I like to use this term called ATR, average true range. Average true range just tells you like the average movement over a 14-day period. Okay, so I'm going to go in here. And if you guys don't know how to find ATR, very simple, right click like you did earlier, go to edit studies, and then you just type in ATR here and you add selected, and then you see it show up on the right hand side. So I'm going to move this one up so that we can get it closer and we'll show you. So you can see right here, there's ATR. I entered around 60.54, and you see ATR right here is around 4. I would take my entry 60.53, and if it fell by 4 points to 60.49, which would be all the way down here, then I would exit the trade. I'm expecting it to go up, but it didn't, and so therefore I want to take the loss and exit. So now that this has pushed up, it's now officially a winner, right? It's going in the direction that I want. And so this is a good lesson for all of us. Not every trade is going to pan out the way that you want to. I'm expecting this trade, if we zoom out a little bit, after it bounced down here, I'm expecting it to go all the way up, but that's not always going to happen. The market goes up. I want to move my stop loss from here for one ATR below this candlestick. So this candlestick formed at 60.54. Now we're at 60.53. Okay, this is my stop loss. Now it went all the way up, 60.61. We subtract 4, which is around 60.59. And as it hits 60.59, then we're going to be out. And so as you can clearly see, it hit 60.59 right here at 12.35. And so when that happened, I exited the trade. And as you can see, the market then decided to kind of slow down a little bit, right? It entered this 60.53 instead of continuing to go down. There seemed to be some buying power here. And so once we're in this area of support again, right? Well, I'm looking for a C, criteria of entry. And I saw a criteria entry at 105 Eastern time. So right on this candlestick again. There is some selling power, there's some bullish buying power right here. It broke past the high of the previous candle. I entered right here at 106. And I sold a 60.55 credit spread right at the money. I entered around 60.56, so subtract around 3, so 60.53. Okay, and so as the market went up, move that stop loss up, it's around 60.69, so subtract 3, 60.66. So right around here on this candlestick right here, as I broke it, I said I take the profit and I got around 120 bucks, 115. And this allowed me to make $1,700 in around an hour. This tiny upswing right here, and I traded this upswing right here. You can make the argument that sure, I could have made max profit on this trade by not buying it back, and I could have just doubled down when the market came back in and went up, forms a lower high, that it continued to push it all the way down and broke past this area of support. I would take a large loss. And so I'd rather take a little bit of profit as opposed to having to take a large loss. Follow Max and see where it takes you. Hopefully that's going to lead you to consistent profits. If you want to see an even easier way of setting stop losses in the Max system, where you can make another $1,200 a day, make sure you guys click on this video right here. And if you guys like the content and you guys want to learn how to create more secondary income, make sure you guys like and subscribe to this channel. I'm on a mission to teach you guys how to quit your 9 to 5 by focusing on your 5 to 9s.